We made money in 2008. Mm-hmm. So we had like, I think coming into 07 and 08, we had like A+ strategy. I think our execution was probably, B-. You were in a fraternity, I was in a fraternity, and my fraternity was pretty chill about like hazing. We didn't really haze, but we had like a hell day. Yeah. And I remember sitting blindfolded, and one of the things we're like, listening to this terrible music, and someone gave me an alarm clock sitting next to my ear for like an hour. Oh. So I always remember that experience, like how annoying that is. I mean, it was just more mental, like whatever. Yeah.
But what was it about the trading, about being in the trenches? Was it just all the pressure? Was it the frenetic pace of activity?
Well, I feel like we had a front row seat to it, and we made money in 2008. Mm-hmm. So we had like, I think coming into 07 and 08, we had like A+ strategy. Mm-hmm. I think our execution was probably, B-, and probably because of the stress of it. Mm-hmm. But there was just like, we knew where all the mines were in the minefield. Mm-hmm. We thought, right? Like, we're like, well, there's a problem obviously in subprime. There's a problem in the commercial mortgage market. Right. There's a problem in, a lot of the financials, whether the broker dealers or the insurance companies.
So you're able to stay out of the way of that risk, essentially.
Yeah, but we were also like, you were like, all right, well, this guy in that, if you're long, if you're short a company, let's say in insurance, like, or financials, we have all these shorts. We own CDS, we're short the bonds, what have you, buy puts in the stock. Like, all right, let's be long something, and then be like, oh my gosh, this is so bad. You can't be long anything. Yeah. Like it was like, it was like there was no longs. And so, I mean, as much as I think we did well on the shorts, like every long hurts you like 5 times to 10 times more than you ever thought it could. Right. And quickly, right? So even though you were like, had a front row seat and you thought you were navigating them, like it was so much worse than we ever thought it could be.
Yeah, a lot of it has to do with the magnitude moves, right? When the bank stocks start trading at those small prices, and say when, Lehman goes from 21 to 14, it's like, oh my God. But then when it goes from 14 to 10, it's like, oh my God,
So we had a short position on Bear Stearns via CDS. Okay. And, Bear, they had 2 big businesses. They had prime brokerage for hedge funds. Hedge funds are fickle clients. That's a nice way to say it, right?
Right. Yeah.
And they were massive in the mortgage, whether it's CMBS, RMBS, whatever. They had a great franchise.
That was their book. Yeah.
Those were like really 2 hard businesses, right?
Yeah.
So we had a short position. We made money on the short. We covered, here are the inklings they're going to get bailed out, and then JP Morgan bails them out, and then the market rallied. Yeah. Like this is 08, and even though that subprime had been blown out of the water, CMBS, commercial real estate was getting blown out of the water. Yep. You had all these, hung LBOs, but the market, rallied after that. The day Lehman Brothers was trading at 600 basis points in CDS on Friday. Yeah. So the bonds roughly, were trading in the low 80s. So that's like bad, but it's not like everyone thought. I mean, we've seen the movie, we read the book, Too Big to Fail, whatever. Yep. Everyone thought Lehman was getting bailed out. Yeah. Right? Yeah. Like we already saw the setup on Bear Stearns. Like Bear Stearns was worse than Lehman. Yeah. If you looked at the balance sheet. Right. But they got bailed out. So Lehman's going to get bailed out. So that's what I think was like the setup was so violent.
There was a head fake in there, the nasty one.
Right. The bonds go from 80 something to 8, the next week. Yeah. On 125 billion.
That's incomprehensible for most people. Most people will never see a move like that in their life, correct? I mean, like
let's hope not.
Yeah, that's like a total outlier.
Because I think the next one that's like that, who's going to bail them out?
Yeah, yeah. Well, put it this way: if your gift for banter about the markets left, you left another quote in my head because I was at Dolman Rose at the time, and the stock market was cratering towards. S&P cratering towards 700, 800, and I called you up, and there were phones ringing all around you, and you were like, you took a second for me. You were like, TG, it's gonna be so that, like, admitting that you're long a stock is gonna be like admitting that you have syphilis at a cocktail party in New York City. I gotta go, and I hung up the phone, and I was like, oh my God. I was like, I said to the guys around me, I said, the smartest guy I know on the street just said the most profoundly bearish thing that I've ever heard in my mind. Maybe that's the bottom.
Right.
You know?
Sure? Yeah,
And
it
I had
probably
never
was.
heard, yeah, it was close. I mean, we hadn't reached the bottom yet, but we were getting to that point that I don't think anybody in the world, I mean, unless you were there, obviously, anybody in the world even understands the fact that, you know, for a while, the thought of Lehman going bankrupt was the same as the thought of Apple going bankrupt tomorrow, right? It's the same exact thing, essentially, where a behemoth in the industry.
Well,
all
I
of a
mean,
sudden,
Apple doesn't have. I mean, the
over
leverage.
time.
Yeah.
No. It's, you know.
Well, Apple almost went bankrupt.
Yeah, true. Yeah,
Right.
that's a fair point. That's a fair point. Back in the days, but my point is just the thought of an institution like that not being there was totally unheard of.
Yes.
And so that was part of, you know, the feeling that everybody felt. The S&P was cratering 800, 700, and we probably hadn't gotten to the bottom yet. But at least you were the beacon of sentiment, right? You laid the sentiment out. You were like, stocks are like poison. Can't have them right now.
We would talk about all the scenarios of like what could happen and how bad it could get, and you know, I mean, Merrill Lynch, right? Like Bank of America, you know, they could bail them out. I feel like they kind of got picked off in a sense, right? So they're at the doorstep, you know. Morgan Stanley bonds traded in the 40s. I mean, you know, Goldman, Warren Buffett gave them the big preferred, and the stock was at 109 and went to $40 like 3 weeks later.
Right.
Like Warren's wrong.
Right.
You know, like he was way underwater on that.
Right.
So the AIG, you know, could have went under. I mean, we were saying at the time, like if you went to like Broadway and got like, you know, 50 actors, like, hey, you guys are like day actors, and like went to some bank early in the morning, put them there, and they started pretending like they couldn't get their money, like people would freak.
Yeah.
You know, I mean, we didn't do that.
No, yeah.
But like that's how tenuous the situation was.
Yeah.
In the sense that like, I mean, I get back to, I always think about like credit, right? Like, so I lend you $100. You're like, Kieran, I need, but now no one has cash, but back in the day, like.
Right, give me $100.
Yeah, like, yeah, well, I'll give Tony 100 because I believe he'll pay me back, right?
Right.
And credit, it comes from Latin credere,
Right.
which means to believe.
Right.
Like nobody believed anything at that point,
Yeah.
right?
Yeah.
Now people believe that Lyft, that lost, you know, I don't know how much they lost, $2 billion last year?
Yeah, $2 billion.
Like it's oversubscribed. I read this morning, right? Everyone believes that Lyft's going to be. I have no idea if
Right.
Lyft's going to be profitable.
Right.
You have no idea. Nobody knows, right?
Right.
But everyone believes it because they're
yeah.
lining up and like, you lost $2 billion. That's it. Give
Yeah.
me the stock,
Yeah.
right?
Opportunity to improve from there. Yeah, it's got to
Exactly.
be. Yeah.
It's a low bar.
Yeah, it's a very low bar.
But I feel like, I mean, in a sense, that if you think about Amazon, right, they set that up, right? Because like forever, Amazon was making no money, and Jeff Bezos, like what he's done, it's phenomenal, right?
Yeah.
Like amazing. It's
beautiful.
And even though like I was talking to someone the other day, even just the retailing side is phenomenal. Obviously, the cloud side, amazing, right? But like he might have got lucky on the cloud, like because not lucky. That's the wrong way. He says he does all these experiments, right? He places all these bets, right? He has 500 bets. And the cloud worked out. And maybe that's part of the strategy. But like the cloud has been an amazing, AWS has been an amazing,
Right.
you know, business, right? That took everybody by surprise.
Yeah.
But why I'm bringing roundabout way of saying, he kind of set up, and he might be the one in a million, it probably is, the one in a million business genius. But he set up this bar where you can lose money for a long time as long as you have this vision that it's going to be great. I mean, does the Lyft or Uber business model even work? I don't know. You know, like I don't know if it works.
Yeah. It's tough to tell.
I don't. Did you listen or read the book on Theranos at all?
No, I just watched the special so far.
Okay, so I did the podcast on it, which is an amazing podcast. I mean, it's totally insane. Like you had all these people from Apple that like were, you know, Steve Jobs' right-hand man went to Theranos.
Yeah.
And left in 2012 because he was like, this woman's a complete hook.
Right.
Right. And the hoax went on for another 5 or 6 years.
Yeah. It was unbelievable.
So I don't know. You know, like who knows where we are.